Hello and welcome to this Moneycontrol live stream. I'm Nandita Chinka, and today we'll be discussing about the hot sector now, that is defense. Now, defense stocks are the flavor of the day because we've seen a new listing, Kaynes Tech, that listed at a blockbuster 30% premium to its issue price. Now, it's a pure play defense companies that provides technology, engineering, as well as services to a lot of these defense companies in India as well as on a global level. Now, on the whole, defense stocks have rallied quite a bit when it comes to some stocks like Doc, BEL, BM, and all these counters have run up quite a bit from the start of the year, with some of them, in fact, most of them giving returns to the tune of 140% or thereabouts on a YTD basis, mind you. Now, will this green run continue and will defense be the sunrise sector for the decade? Well, to put that into perspective and to figure out which are the best stocks in the defense sector right now, we're joined by Amit Kumar Gupta, who's the founder and CIO at Fintrekk Capital. Uh, let's talk about the debutant for today, the Kaynes Tech. Well, that listed at a 30% premium, and in fact, some analysts are saying that it has the potential to, in fact, triple its profits by the next fiscal, that is FY24. Uh, Mr. Kumar, what do you think are the fundamentals? How do you think are the fundamentals stacked up for this one? Do you think it has the potential to triple its profit by next fiscal?
Yeah, hi Nandita. Thank you for having me. As a framework, we really do not invest in IPOs, but the sector, or rather the subsector under which the Keynes operates, which is providing conceptual design, process engineering, and cycle support. I think that that space is very exciting. We do have some exposure to that subsectors. But I think Keynes, at after getting a good listing, it's sort of trading at a P multiple of close to 80 now, on a trailing 12-month basis, TTM based earnings. So I think it's quite fairly priced. But we will keep on track because they are utilizing the proceeds to repay the debt and to expand their current facilities. They're also coming up with a new facility in Karnataka. So we'll keep a track on it, but as of now, no, we don't have really a position in the company. But it's definitely a very exciting space to be in, and very high growth potential in the coming next 3 to 5 years.
Right, high growth potential for Kaynes Tech. So, when we talk about the rest of the defense stocks, some of them, as I mentioned, have yield somewhere around 140% on a YTD basis. In
Right.
fact, central initiatives such as Make in India as well as Atmanirbhar Bharat has boded pretty well for the sector. In fact, even in the budget, the government had a pretty ambitious outlay for the sector. Uh, so, as this whole outlay and the whole focus on defense, this may provide like a huge leg up to some of these companies' order books, right? So, how much more of an upside do you expect for some of these stocks?
So I think what has happened is something which started almost 2 years ago, when government came up with this Make in India initiative, and they notified basically three lists of total about 300 and odd defense items, which will be procured locally in the next 5 years or so. And this includes a range of equipments and submarines and helicopters, missiles, etc. Now, out of those 300 odd items, almost 90 are planned to be made in India or indigenized by December of this year only. So that has caused a very sharp uptick in these companies. The estimates which government has given in the last budget was that almost 5 lakh crore of contracts will be placed for these defense platforms and equipments in the next 5 years. And out of that, almost 68-70%, that is about 3.5 lakh crores, will have to be produced within India. So that has given a very large push to these companies. The order books have obviously gone up. But what has also happened is that now the MNCs, they have got a lot of defense orders which they have to give to the local companies, and because they have a penalty in the offset clause. So that this offset clause says that up to 50% of the manufacturing has to be done locally over a partner here. So if they don't do it, they have to pay penalties, and if they pay penalties, their margins will get reduced. So this whole offset clause is actually benefiting the local players. And what was almost impossible, 2 3 years ago, now that has become sort of a reality, and we can see in the order books of these defense companies. So I think this is a theme for the next 3 to 5 years. I mean, this is not going to go away, very quickly. Obviously, the Russia-Ukraine war has sort of pushed this incentive a little bit more globally as well. So we are, looking for companies which can sustain and deliver on these order books going forward. And whichever companies are able to, do that, I think there is a long runaway ahead for them. In the short term, maybe because they've run up so much, as you said, almost 140, 150% of ITD. So they may consolidate a little bit. At time correction could be there. But if somebody has a vision of holding a stock for 3 to 5 years, then I think it's a space where one should look out for building positions.
Right. A lot has been spoken about self-reliance and Atmanirbharta, but India has also started exporting to smaller nations, right? So, do you think going forward, India has the potential to match the likes of, say, Lockheed Martins of the world when it comes to supplying defense equipment to the rest of the world?
Yeah, I think that's a sort of a underplayed theme within this whole defense sector. That it's very good to have Make in India and have people making MNCs making equipments here. But I think the real potential will come out in the exports. I think the visibility right now is little low. In terms of the companies which we are tracking and the orders flows which we are coming in. I mean, recently Bharat Forge got a very big export order in the defense sector. But I think it's a developing story. It's not, something to keep track on and see which company is getting more benefited of the exports. I mean, no doubt about that. A lot of these companies have the potential to export as well as to make in India. So the potential is there, but I think right now the visibility is low, but the room to grow and export much more and become the Lockhardens of the Martins of the world. I think the potential is there.
Potential is there. So, among the between the PSUs as well as private companies, which ones are poised to give better returns in the future?
So I think that's a sort of a becomes a personal framework choice. What you want to have, we prefer private companies more than the public sector companies. Even though the risk in investing in these companies is that there is only one major supplier, that is the government of India. So all the contracts have to come from government of India only, and the payments have to be made by them. So I think in that space we like more of the private sector space. So we like the space in which the Kaynes technology works. We have a position in data patterns into that, and we are exploring more opportunities in that space, which can cater to the defense theme.
Right. Amit, amongst the other companies like HAL, L&T, Bharat Dynamics, which among these do you think have the potential to be a multi-bagger over the next, say, longer period, 8 to 10 years?
So I think a lot of these companies, especially HAL and BEL, they are placed very well. I mean, they despite the huge run up, the kind of order books they have currently, I think they are fairly priced. So I don't know about multi-bagger, but at least one can consider that they can grow at a 20-25% CAGR over the next 5 years. So I think what will happen is that they'll grow by 20-25% over the next 4 5 years, and then they'll sort of plateau a little bit and grow at 15 to 20% CAGR. So I think the overall growth pathway is much more higher in these companies. So HAL, whether it's HAL, BEL, or even Bharat Dynamics, The potential is much more because the order books are so well. And obviously there is a lumpiness to the business. You don't know how much payments will come. So that is something which we have to keep track on for these companies, because the working capitals are very long for these companies. It's almost like 1 to 1.5 years. But we are seeing that advances are coming from the government. So if the advances comes from the government on time, and the pressure on the working capital goes down, then all of these can give very good returns over the next 5 7 years.
Right. Good to have you on the live stream today. Amit, thanks a lot for joining in. Well, with that, we come to the end of this live stream. Stay tuned to Money Control for more news.
Thank you.